Hi CS students, let's revise CFA and AFM Chapter 8 Mutual Funds. Practical question 11. Mr. Y has invested in the 3 mutual funds as per the following details. In mutual fund X, mutual fund Y and mutual fund Z. Amount of investment is given, NAV at the date of purchase is given, but date of purchase is not given. Dividend received up to 31st March 2018 is given during the period of the mutual fund investment, and then NAV as on 31st March 2018 is given. Then effective yield per annum is given. So in the previous problem we have found out this effective yield per annum. Here they have given this effective yield, so it will be a reverse calculation to find out the missing information. Assume 1 year equal to 365 days. Mr. Y has misplaced the documents of his investment. Help him in finding the date of his original investment after ascertaining the following. So we need to mainly find out the date of his original investment in all the 3 cases. Okay, now the number of units in each scheme has to be found out, which we can easily find out by dividing the total investment divided by the NAV at the time of purchase will give us the number of units in each scheme. So 2 lakh divided by 10.3 will give us 19.417.48. Then 4 lakh divided by 10.1, 39,603.96. Then 2 lakh divided by 10 will be 20,000. So these are the number of units in each scheme at the time of purchase. Then they are asking total NAV. So here total NAV signifies at the as on 31st March 2018, and even we don't know actually NAV at the time of purchase will be nothing but the investment itself, because using that only we found out the number of units. So obviously NAV at the time of purchase will be same as this investment. NAV as on 31/3/2018 we have to find out. So it will be the number of units multiplied by the NAV as on the date of 31st March 2018. So multiplying with this market prices, then we will get the NAV as 7,99,068. And here there will be yield because the market price has changed. So there will be obviously some capital appreciation, which is nothing but the unrealized gains, and there are some dividend received also, so which will add up to the returns of this mutual funds. Hence this third requirement is total yield. So total yield is nothing but the dividend received plus dividend received, which is the normal income earned, plus the capital appreciation plus the capital gains. So capital appreciation will be unrealized and then capital gains will be realized. Here there is no information regarding capital gains, which is the realized gain. So only the capital appreciation unrealized gains has to be calculated. So which can be found out by, since we have the NAV as on 31st March 2018 and the NAV as on time of purchase, nothing but the investment, we can find out the yield, which is capital yield, nothing but the capital appreciation. In the first case it is a negative. This is because the NAV at the time of purchase is 10.3 and it has reduced to 10.25, hence there is a capital loss. So in the first case MFX, it is negative 970.83 and we have a dividend received of 6,000. So net amount is 5,029 is the net yield. In case of MFY, it is 3,96,039 minus 4 lakh. Here also, as we can see, the NAV has reduced from 10 to 10.1 to 10. So hence there is a capital loss and there is no dividend actually in the MFY, hence there is a negative loss, negative yield in case of MFY. And in case of MFZ, there is a capital appreciation from 10 to 10.2. So the 20 paisa multiplied by the number of units. That is one way of doing it. Or the NAV as on 31st March minus the amount of investment also will give the same results. So 4,000 in the second case plus 5,000, there is a dividend yield also. Hence the total yield will be 9,000 in the case of mutual fund Z. The total yield of the investments Mr. Y's portfolio will be 10,068. So 10,068 divided by the total investment Mr. Y did is 8 lakh. So the total yield will be 1.2586%. Okay. Now the last requirement is number of days investment held. Here they have not given when Mr. Y has purchased this mutual funds, but we know the effective yield per annum, and we have to be very careful because it is per annum, not the yield of the period. So we have to do reverse working to calculate this number. We know the initial investment is 2 lakh and the yield is 5,029. So this is for the period of investment, and the yield will be 2.5146. This yield percentage is for the year, for the period. We don't know what period it is, but for the investment period, from when to when Mr. Y has holded these mutual funds, that period is this 2.5146%. Now we know that the annual percentage is 9.666. So 2.5146 is for the period divided by the annual period 9.66 multiplied by the number of days will give us the days, correct? Okay. Or simply saying, in case of MFX, in the previous problems and all, we found out this annual yield. How did we found out the yield percentage? In our case, it is 2.5146. Then we divided the number of days or number of period of holding multiplied by 365, correct? Now the period holding is what we are finding out, which will be X in our case. Now 2.5146 multiplied by 365 will be 917.829, and this X will go to the numerator, 9.66 will come to the denominator. So we'll get 95.01, approximately 95 days. So in the case of MFY, it is 31 days, and in the case of MFZ, it is 68 days. Now using these dates, if we reduce these dates from the 31st March 2018, we'll get the date of investment. So if we reduce from 31st March 2018, 95 days, the date of investment will be 27. If we exclude the 95th day, then 26 will be the dates. So anything is fine in this case. And they have not mentioned that anything like a clear days, something like that. If that is the case, then we have to take only the this 26 12 17. We should exclude the date, and then when there is no specific mentioning of that, so that's fine. So these are the original data for investment. That's it. Thank you.